Some people are already beginning to talk about a bubble in social media. What do you think of that?
Well, look, bubbles are empty vessels. You've got companies here that have significant revenue growth, operations around the world, and most importantly have executed through the financial crisis. And that's different than the last bubble where everything was going up and it was simply business plans that we were selling to the market. So if you're making comparisons to the last bubble, this ain't it.
But if you think about some of these social networks, they've created something of real value. I mean, they're some of the best advertising networks you could have. We've seen Google's valuation in revenues. And, you know, as an investor in Zynga, which is a network play and within Facebook and other things, I can tell you that there are meaningful revenues and meaningful people as interactions involved with these, and I think that's worth a lot of money.
I think the valuation bubble is probably more so at this earlier stage because, you know, these companies, sure, the prices are high from a price revenue multiple, price earnings multiple, but these companies, at least unlike 99 that are raising these $100 million private rounds or IPOs, are multi-$100 million revenue companies, all of them quite profitable. But there is, in my opinion, a bubble in the earlier stages where companies that don't even have products yet are raising tens of millions of dollars, and that is more concerning to me as an investor.
I think when you look broadly at the market, you have Apple, which might be the greatest technology growth business in the world, sells at 13 times earnings, and Google sells at 18 times earnings. It's hard to see that really is a broad bubble that's developed. I think what LinkedIn shows us is that there's basically growth investors have been in the desert for a very long time, and here's a big picture of water.